So first go to coinflex.com/AMM or click the link in the description below, and you'll be taken to a page which presents you the interface for the AMM. If you haven't signed up for an account, you can sign up on that page either with MetaMask or with your email and password. And so you can create a position in a few simple steps, which we'll break down for you. The first thing you need to do is pick whether you're gonna be leveraged or unleveraged. And unleveraged is effectively trading the futures contracts as if they're spot. So if you're buying and selling, that means you're gonna be putting equal amounts of dollars in crypto, and you're effectively going to be, there's no liquidation price, you're just trading with what you have. And if you're leveraged, what that allows you to do is trade, including as a buyer, with crypto. And also, you can use your USDC, you can use your stable coins and be leveraged as well. So this is a popular option for people that are bullish on the crypto assets themselves, want to earn from those price appreciations, but also don't want to sell out of their position as the market goes up, which is a problem people have on a lot of AMMs, where if the market rallies, you're selling out of your core spot holdings. And this AMM allows you to provide liquidity, but also not sell out of your core spot holdings. So the advantage of leverage effectively is that you can earn more on your capital while also taking more risk. And the advantage with being unleveraged is you have zero liquidation risk and you're never going to pay any funding rates. So the next step is picking a direction, and this will determine the strategy that your funds get deployed into. And so there's buy, sell, and neutral. The buy strategy effectively will buy while the market is within your range. So let's say you picked Ethereum and your range is 3,000 to 4,000. This is effectively going to buy from 4,000 all the way down to 3,000, and at any price, if it's been filled on a buy order, it's going to be selling one tick, or about 10 cents higher than the price that it bought at. So it's going to be ending up in long positions, long futures contracts, and it's going to be selling out of those long positions. But the key thing is it's never going to be short that asset. So if we're talking about Ethereum, it's never going to be short ETH, but it's always going to be buying and selling out of ETH. So for example, if you are buying at 3,000 to 4,000, you're going to be buying from 4,000 all the way down to 3,000 anytime you're filled. Let's say you're filled on 3,592. You'll be placing a sell order at 3,592 and 10 cents. And so that 10 cents and the trading rebates will be your profit, and then you're going to be continuing to buy all the way down and sell all the way up. And this is how the buy direction works. So the sell effectively is the opposite of the buy. It's never going to be long ETH. And so if, for example, you did ETH and 3,000 to 4,000, you're going to be selling ETH perps all the way from 3,000 to 4,000. And if you're doing this with USDC, this means you will have a liquidation price, because if ETH goes up high enough, you will obviously get liquidated. If you're doing this with Ethereum collateral and you're doing this unlevered, you'll just be slowly selling out of your Ethereum. So it's basically a willingness to say, okay, well, I'm happy holding ETH here, and if it goes to 4,000, I'm happy to be fully sold out of it. And if it ranges between 3 and 4, I'm going to be earning profit from the volatility of Ethereum. So the neutral AMM is really a combination of both the buy and the sell. So for example, if you've done ETH 3 to 4K, you're going to be buying ETH from 3,500 down to 3,000, and you're going to be selling ETH perps from 3,500 all the way up to 4K. And so what this does is it creates a sort of bet where if ETH is ranging from 3 to 4K, you make a ton of money. But if ETH goes up to 5K or down to 2K, you end up in either a long position if it goes down, or a short position if it goes up. And so again, if you're unlevered, what this means is it's a way to sell out of your ETH if it goes high enough, or buy into more ETH if it goes low enough. And if you're leveraged, this can put you into a short position or a levered long position. Picking a trading pair is simply picking which market you're deploying your AMM positions into. So this is where you make the decision on how much capital you're going to deploy into the AMM. So if you're deploying a couple $100 or deploying a couple $100,000, this is where you make that decision. So for leverage positions, this is where you're going to be choosing how much leverage you're deploying and also which collateral you're using. So one thing that's unique about CoinFLEX is you can use one coin to trade in another coin. So you can use Bitcoin to provide liquidity in Ethereum, for example. And this is where you select which coins you're using and how much leverage you're using. So this next step is selecting your price range. And this is effectively determining how concentrated you want your capital to be and at what prices. So for example, if you're buy only on Ethereum, 3,000 to 4K, all of your orders will be concentrated in that range. And if instead you concentrated from 3,000 to 3,200, your orders are going to be much more concentrated. You'll do much more volume while it's within that range, but you also have a higher risk that Ethereum either goes above or below your price range. And if it goes above, you may be wanting to reset. And if it goes below, you'll be stuck with a long position and you won't be earning any fees. So a tighter range means that while it's in the range, you're going to be earning more fees because your capital is more concentrated, your orders are more concentrated, so you'll be trading more volume. And a wider range means you'll be trading less volume, but the upside is that you're much less likely for the price of the asset to go outside of that range. And so if you are looking to be a more passive participant, a wider range is probably ideal for you. And if you're looking to be very actively involved and occasionally resetting it as it goes out of the range, the tighter range might be more suited to you. So the way to learn more is simply go to the coinflex.com/AMM. You can see there's an FAQ at the bottom. You can also join our Telegram where you can ask me or any members of the team any questions. And you can also go to coinflex.com/campus.